Hello guys, how you all doing? I just want us to have like a quick, I don't know if I should call it a session or what, but I just want us to go through NASDAQ, just go over NASDAQ and update some of the stuff. Because remember when we made the analysis on uh, Thursday, these were the drawings that we had that day. If you can just check the last analysis or the post that I made on NASDAQ. So let's just go over it and see if we can get any trade opportunities. And if you're interested, Oronali a mentorship that you can join. So you just let me know. So this was what we were expecting last week, Thursday, yes, when the price went up because we formed this level. We came down, we rested there for I think about a day, and then we came down again strongly, and then the price went up. That's when we're expecting it to sort of maybe push into the bigger H, because remember this is H4, so we're expecting it to maybe get into this area here, which is our daily, and then the horizontal line just marks where the H4 level starts, and this one marks where the H4 level starts. I just didn't want to mark all of them because otherwise my chart would be a mess, man. So that's why I put the thing. So we're saying we need get there, but unfortunately it didn't, but rather it got rejected, but it still managed to go to the end of because remember when the level is formed, the price will go up or down before coming back. That's when you're looking for trades there. If you're executing, remember your TP1, you always put it here before the zone that you are targeting. So this is what I mean. I'm sure if you've been following my setups, I'm always telling you about this. What can I use? I'm always telling you that when the price is moving up and then it gives you identify this is your area of support and you are planning to take trades from it, and then now the price comes down and then you execute and then execute there, and then the price goes back up, right? Let's say it goes back up, right, like that. But we don't just ignore this area here. Like I always tell you, we can't ignore this. We can't ignore this high, because obviously the price got rejected there. So you should always ask yourself, why did it turn here? So if I'm buying, I should make sure that I cut some of my profits here just in case it gets rejected again. So that's what I always teach you, to say that where the price turned before coming back to your level, that's where you have to exit. That's where you have to put it as your TP1. So which is the same thing here. When you made the analysis on Thursday, if you had managed to get trade from there, you can't skip this area, because remember the price did this and then it went up. So when it's coming down, as much as you were expecting it to go a bit lower, but it didn't happen, but at least it gave you enough for you to hit your TP. You see, that's what I always say you should do. You don't just ignore the stuff that you can see that this is an area of what, because obviously this is H4 area of support, right? So you can't ignore it. It hasn't been broken. So why do you expect it to be broken? As much as the bigger structures were pointing to the downside, but yes, on a smaller scale, this level can still hold again. And if you are trading on that smaller scale, you shouldn't ignore it. But if you are trading on weekly, you will be watching the structure on weekly and not focusing on what is happening here, right? So now, like, remember, you must have your own, like I always tell you, must have your own time frame combinations, right? So let's say H4 is your time frame combination. It's your highest time frame. Let's say you decide to go with H4 and H1, or maybe H4, H1, and also M15. So it means currently, let's remove this because this was done a while back. Let's remove this, and then the rest of the stuff still applies. So it means if you are trading H4 and H1, or maybe H4 and H1 and also M15, it means when you're marking your level below or your support, it will be here. This is your nearest support, right? The very same one that I had marked with the horizontal line. So it means your H4 is in consolidation. Why? Because this is an area of resistance that you marked, and this is an area of support. The price has been bouncing in between the two. It's no longer making higher highs or lower highs, or it's no longer going up or down. We have just been moving in between the two, and we will stay in consolidation until one of either this or that is broken. That's the consolidation only applies on this time frame that you're looking at. So you're not going to go up to daily and say, I said we're in consolidation. No, because remember, when you're analyzing or assessing or doing analysis on a certain time frame, whatever that you say there only applies on that time frame. So when you move to a different time frame, you need to start afresh and assess it as an individual time frame. So now here, if you're trading, like I was giving an example, if you're trading H4 is your highest, and it means when the price hits this, you're looking to go down. When it hits this, you're looking to go up. So if, let's say, you had missed an entry here, and then the price went up, right? So which means you can see that this candlestick that it went up with was very strong, and it did what? It engulfed. It was engulfing candlestick. So which means let's say that engulfing happened where on the highest time frame on your sequence. Like, remember, I'm giving an example with what? H4 and H1 or maybe M15. So your highest time frame, which is H4, is giving you the engulfing. That's what you know. So it means when you're going down to look for buying trades, if let's say the price bounced, then it came back. If you're looking to buy again, you'll be saying, the last time the price came here, it gave me an engulfing. So let me try and take trades in the same direction of the engulfing, which is how you trade. So the same way here. If I hope you remember, we had this one on the analysis we made. If I still remember the date, it was on last week Tuesday, I think. Yeah, I think it was last week Tuesday, where we had the engulfing, right? And then if you decided to take trades from that, and you'll be like, we had the engulfing, and then the price is going up. If it enters into an H1 area of resistance, then you are trading, because of what? You are taking trades in the direction of what? The engulfing. The same thing here. You had the engulfing, now it's coming back. If you get reasons to buy here on your highest time frame, which is your, remember, you're buying from your highest time frame on the sequence, which is your H4, and we're inside the H4 area of support. And the last time we were here, we had the engulfing, and then you had, if you get reasons to buy from there, you know that you've got all the support to take that trade, which is what happened here. So let's check what is happening on, but you can see that how can I put this? Let's go back to H4. There's something I wanted to mention here. So we bounced from this. We had two nice what do you call this, pin bars. But because remember, when you're trading pin bars and their form, let's say this pin bar is forming at I don't know if you wanted to take the whole thing. If you wanted to take the whole thing, remember, you always measure the distance from where you are entering to where you're going to exit, or to the nearest opposing structure. The difference there, or the distance, must be at least double what you are risking, which is what part of the risk management. So if you find that whatever you are trying to risk is bigger than what you stand to make before the price hits the opposing structure, then that's not a good trade to take. So even here, you had these two rejection bars that are forming around the H4 area of support, but because you are trading on H4 and the next opposing H4 structure is here, it's too close. So whatever that I'm going to risk, it must be the same amount as what I'm gonna get before the price hit the thing. And remember, we need at least 2:1. So this is not something that you would take. So I think here, because H4 is in consolidation, what would work is getting trades on smaller time frames until one of them gets taken out. At least that's when you can start targeting higher places or even lower. Let's check what is happening on what do you call this, on H1, and see if we can get anything from there. Yo. So the candlesticks that it's been making, you see, I like candlesticks that are like this, that you can see that is the bulls that are pushing the price, not what we've been having here. The candlestick is blue, this is red, this is blue, this is red, but all of them, they are at the same level, you see. So the whole day today, what the price action hasn't been nice, so we don't have anything as yet, guys. So we want stuff like this, so maybe you can say the price was here, and then it went up there, and then it came back, and then it went up there, which is higher high. I think maybe the only thing that will make sense is just to put your trend line and say we had a higher high, then I can put my trend line there. But other than that, what is happening here, it's the price action is around the same level, so we are not getting anything. So, and you can see that most of them are rejection candlesticks, so there's like a tail above and tail below, tail above, tail below, so it doesn't tell you or who is in control. Unlike a pin bar that looks like this, you can see that this it is showing that there's too much bullish force. Why? Because the price went down, but the bulls pushed it all the way up and left a tail. Same thing here. What is currently happening, the tail is above. It means the bulls try to go up, but the bears push them down, so there's too much bearish force there. So I would say currently, based on what is happening here, I would say just wait, guys. You don't have to force trades, just wait. This is, look at this is no, maybe if the price you see this like I'm saying now, currently you have that the bullish rejection bar there, but it's just that it's forming in the middle of nowhere. But maybe if it causes the price to come down towards the trend line, yes, maybe if you get trades from there, then now you can think of taking trades from that area, from around here. And you can see that the way the price took off from this area, it was nice candlesticks. Yes, it shows that yes, the bulls, they really meant what they were doing there. So when they coming back, if the price was to get there, but it shouldn't break the trend line, then you can give them a chance. But based on this, no guys, even I'll say from last week Friday, we haven't been making nice moves. So let's just wait. So it's a waiting game. Let's just check M15, which is like the last time frame that we can go over, and see if we can get anything here. Let's zoom out. Come on. This price action, you can see, I want stuff like this where we just decide on the direction that you're going at, and then maybe we pause and then we go up. Not where I'll just go up, down, and then just be doing that. Okay, see, I want moves like this. Those are the ones that you want, but currently you can see we haven't been getting those. So it's a waiting game. Let's just wait for maybe a day, and then if you are trading smaller time frames like M15 and stuff like that, and you are impatient, and then you just like taking trades in I don't know. I don't see anything. We can't even put a trend line here. It's not gonna help us. If you decide to put a trend line here, how is it gonna help you? Like if you decide to put it somewhere here, it's really not gonna help you if you're trading. But how can you have M15 as your highest time frame? Remember, I don't encourage you to go that low, and then you have your thing. I don't know, those who are trading M5, you can look to buy from that and then exit here, nearest opposing structure, which is going to be at this high. So you can see the gap from this to that is very small. The distance is very small, and this is M15, so it's really not worth my energy. But if you don't have enough patience, you'll try and execute that. But for me, I want the bigger fish, so I'm gonna wait a bit. So that's all that we have on NASDAQ, and then yeah, I'll leave it like that, and then I'll see you guys in the next one. This is how you're supposed to approach the chart when I say you must do top-down analysis, so that you know that on this time frame I have this, on that time frame I have this. So therefore when I'm combining the two analysis from the different time frames, I can come to a conclusion that I can do 1 2 3 in this direction from this area. Then that's what that's what you call analyzing. Not this thing of people opening a chart just one time frame, and then already they're drawing an arrow showing you where the price is gonna go, and then you believe them. Nah. I mean, how did you know that? How do you even predict such? It's like you're just guessing. I can't tell you where US 100 is gonna go just by looking at M15 alone and tell you where it's gonna go. No, guys, so we can't play like that. All right, I'll leave you like that, and then I'll see you guys in the next one. This is the last video for tonight. Hopefully I'll bring another video tomorrow. All right, sharp.